John Mauldin, president of Millennium Wave Investments and author of the book, Endgame, The End of the Debt Supercycle and How It Changes Everything. It's a New York Times bestseller, and John joins us now from our newsroom in Dallas. John, great to have you on this show. I know you're a frequent guest here at Bloomberg, but very quickly, let's just start. Dom just was looking at various measures of inflation. We do know that the Federal Reserve tends to look at core CPI, but which measure do you find the most important?
Well, first of all, let me just say the montage you had at the beginning of this segment was really cool, and I like that, where you've got everybody commenting on their view of inflation and how it's not going to be this or not going to be that, and they're all going to be wrong or right, and we'll be able to go back and look at it in a few years. I actually like to look at a Dallas-based piece of inflation, where they have the median inflation, where they take off, they call it the trimmed inflation. They take off either end of the stuff that's moving. And the reason the Fed looks at core inflation is because, let's say, corn prices go up 20% this year, and they go up 20% the next year. Well, we know that the cure for high prices is high prices. And so corn is not likely to go up 20% the next year unless there's something going on in the overall economy. So what's happening is that inflation, from the Fed standpoint, those commodity prices up and down are kind of transitory. And that's why they look at core. Now, to you and me, when we see corn going up or gasoline going up, that's important because it makes a difference in our life. So if we're going to measure inflation, that's why I kind of like the Dallas Fed's way of doing it, where they have the trimmed mean inflation. They looked at trim inflation. They take off the stuff that's way at the end, and you look at it. And what you find is that inflation is, in fact, trending up, as it is in all measures. And I think it's going to continue to trend up, because the real problem with commodity prices is the dollar. And as long as the Fed is printing money with kind of reckless abandon, we're going to see the dollar continue to drop.
John, we left off with talking about this piece you wrote recently. I have it right here on the miracle of compound inflation as opposed to compound interest. But let's talk about why inflation could be a good thing, particularly if you are running the Federal Reserve, or I suppose the Treasury. Well,
let me clarify what I did in the letter. I was kind of tongue-in-cheek, the miracle of compound inflation. Inflation is, by any way you want to measure, another word for default. It means that your dollars are worth less. So if you buy a bond, one of the things you figure into your interest is how much interest, how much money do I want back to make up for what the inflation is going to be, how much less my dollar is going to buy. Now, if you're in the government, for instance, and you're worried about the debt, and you're worried about your debt to GDP ratio, the difference between 2% inflation and 4% inflation over 10, 11 years is 25%. So that if you've got a $15 trillion economy today, which we do, and we grow, 25%, then you're going to see a $19, $20 million economy. But if you're growing at 50%, which is 4% inflation, then you've just grown to $22.5, $23 million inflation. So your GDP is higher, so you reduce your debt to GDP ratio. And so that makes you look good. Your debt is more manageable that way. And that's the, time-proven, historically proven way that governments get out of too much debt, is they inflate their economy away.
John, I'm going to break in here because we do have to go to break. We've got about 20 seconds, but I want to ask you very quickly, hyperinflation. At what point do we know if we're there? We've only got about 20 seconds, unfortunately.
We'll never get to hyperinflation because the Fed understands that that would be the end of the world. So they would let us go into a recession. They'd become their inner Volcker, and they would just let it go.
All right. Thanks so much. That was John Mauldin from Millennium Investments.